Welcome to all. I'll kick things off for the community call. It's 16th October. It's been a few weeks since we last spoke, and there's a lot to go through. I'm going to start with the usual disclaimer. Nothing discussed or presented should be considered investment or any other type of advice. We'll go through the usual weekly highlights and a very brief dashboards review. I really do want to keep it quick today with the intro and jump straight into our very exciting speakers. We do have Kian to speak for KEEL, and also room to talk further for the stUSDS launch before jumping into a Q&A. So main highlights, and I've sort of consolidated a few from the last weeks, but first up, KEEL was introduced at token 2049, the latest start to launch for Sky, Solana's capital engine. It's been quite exciting to see the response. I've had the pleasure of actually going to a few Solana institutional events this week, held here in the UK, and it really is encouraging to see the receptivity and excitement within that Solana community. So more from Kian and team on that later. On Tuesday, we saw the launch of stUSDS, the first risk capital token from Sky. Those who are following the forum would have seen all the work that's going on to set parameters there. At this stage, quite manual, as at this stage of bootstrapping liquidity, but more on that later and much more detail for that. In previous calls, we've talked about some of the new collateral assets that are being considered for allocation. And what you've seen on the forum over these last weeks are very detailed risk assessments for these new collateral assets. So for the direct exposure for PT USDEs, and also for exposure to the superstate USCC offering. And I think this is starting to show the sort of operating model that we can expect to see for how stars and visibility for the ecosystem, but actually also to the benefit of the wider DeFi community, which is something that, you know, completely different to how risk is managed within the TradFi world. We said in these calls we'd bring updates from the core council. So some people would have seen on the forum the post for a technical evaluation for the Agent 4 allocation system. And I think that the good thing about bringing these highlights from the core council, it gives a bit of a forward-looking view of what's coming down the road. So clearly Agent 4 being set up for launch, and I guess more news to follow on that as it becomes ready. Obviously, a lot of work happening and discussion for stUSDS and setting the parameters there, and also a management framework for ASC, or actively stabilizing collateral, which is basically the amount of collateral that stars need to hold in order to support the USDS peg, and that collateral will normally be held in the form of non-USDS stablecoins. As that comes, more information becomes released, no doubt something that's worth deep diving on in future calls. And the final call out, there's so much happening in our industry at the moment, with so much sort of new entrants to the market, but also a lot of scrutiny on the existing players, and a lot of questions being asked. And I think it's always great to see external articles for our ecosystem. We know what a unique project it is, and sometimes that comes with challenges to position, but a great article from the team at StableWatch, one that they titled Central Bank for the Open Economy. I think it's much more of a DeFi native lens on the ecosystem versus something that we had seen, for example, from the S&P team, but something that anyone who's interested in even further explaining Sky ecosystem, highly recommended. I sort of really thought their opening line was very relevant, which is Sky's perhaps one of the most ambitious on-chain endeavors of our time, and it does go into a lot of very well-researched detail. So those are the main highlights. I wanted to keep the dashboards review very brief, so we jump straight into our main speakers. But I will just mention this. You would have all seen it's a fresh new look for the dashboard, and in future calls we'll keep doing what we've already started and further exploring this. Very intuitive. There's a great menu option that allows you to deep dive into any area of interest, and there is actually an amazing amount of detail behind this very simple and intuitive home screen. So without further ado, I'm going to pause it there and hand over to Kian, who I'm sure everyone's going to enjoy hearing from. So I'm going to stop sharing, and Kian, hopefully you're able to share your screen.
I am. Let me see if I can get things moving. Let me know if you guys can see.
Yes, looking good.
Amazing. Cool. Well, as you guys can probably see, I'm coming to you live from the lobby of a hotel where we just came from an event without quite enough time to get to somewhere better for this. So hopefully there isn't too much background noise. But yeah, very excited to be able to join the call, and I might take a few minutes at the start just to introduce myself. It's my first time, I guess, getting the opportunity to speak to everyone here. So my name's Cian. I guess I lead what is now the latest star focused on Solana, that is KEEL. A little bit about my background. I am an actuary by profession, so I started out my early career in banking, insurance, reinsurance, building a lot of systems for risk and capital adequacy. Found my way into DeFi in 2020 and have spent most of my time since there in, I guess, what you might call protocol engineering, or the intersection of protocol engineering, risk and capital. And I guess more recently, had the opportunity to start contributing to Sky and building out some of the infrastructure for the Solana virtual machine with the rollout of USDS. Starting to lay a lot of the groundwork for, I guess, what of late we've been very happy to share the news that KEEL is the latest of the stars. So yeah, I'll maybe just get into the short presentation we've put together to give you guys a bit of an intro. KEEL is an on-chain capital allocator at scale and powered by Sky, but focused entirely on the Solana ecosystem, and built and led by a team of Solana native engineers and folks within the ecosystem, and that really understand the nuance and difference of how Solana works at the virtual machine level, as well as how it works as an ecosystem. And the opportunity, I guess, as we see it, for Sky on Solana and for Solana with Sky is two main areas. The first is that Solana has historically lacked what I guess we've defined a DeFi dollar, or maybe accurately a debt token like USDS or DAI. And that really has constrained in a lot of ways the ability for Solana to grow its TVL, most particularly for it to grow robust stablecoin lending markets and stablecoin liquidity markets. And so a big part of KEEL's role here as a pioneer star is actually helping to grow USDS and helping to grow adoption of USDS, stUSDS, and bring a lot of the benefits that Ethereum and other ecosystems have had from the presence of Sky over the last number of years. And so the second then, I guess, is the lack of a major stablecoin balance sheet, and the role that Sky, Spark, and Grove have played in providing that kind of day one anchor liquidity that has kind of accelerated issuance of high quality assets within the EVM ecosystem. And today, there isn't actually a full legal recourse high quality RWA issued in Solana. And KEEL intends to sort of play a big role in helping to drive and be demanding when it comes to working with issuers to bring those high quality assets to Solana as well. So we're sort of pitching the narrative of KEEL as Solana's capital engine. It's across three sort of main pillars that we're focusing on. First of those is in stablecoin liquidity. So that means working with existing partner DEXs, as well as building infrastructure alongside Sky to bring functionality that helps, provide stability for the peg of USDS versus other fiat-backed stablecoins, but also just generally improve stable-to-stable swap execution on Solana. And part of that is laying the groundwork for more adoption of USDS and better ability for KEEL to allocate USDS as well as other stablecoins into lending markets and elsewhere. The second is in dynamic on-chain capital allocation, or more specifically in credit creation and collateralized lending. So plugging into existing DeFi marketplaces on Solana, providing deep responsive stablecoin lending liquidity. Crucially, that's in USDS, but also in other leading USD stablecoins, in particular in the short term, where demand for USDS on Solana is still on the lower side, but certainly growing. And finally, it's focusing on being both a catalyzing force and an enabler for real world assets and tokenized assets. So as I mentioned, there has been that sort of lack within Solana of someone to sort of really drive issuance and really sort of force issuers to get over that ROI hurdle to invest in infrastructure for the Solana virtual machine, invest in facilitating primary liquidity and secondary liquidity for these assets within DeFi, sort of being the sort of standard bearer or the tough customer when it comes to actually insisting on these quality benchmarks as well. So we're, I suppose, both an allocator there, but also a real catalyzing force, and that's an important part of what we intend to play. And as Rajiv mentioned, we've already been off to a terrific start, working very closely with the Solana Foundation, driving a lot of conversations with issuers and any folks that have been interested in issuance in Solana, but haven't really had that driver of a use case to date. So a lot of activity happening in that space, and I think you can expect to see a lot of news coming in that area as well over the next couple of months. In terms of what it means for Solana, it means DeFi at scale, really, for the first time. Solana has been growing at an enormous scale and doing incredibly well on a lot of different metrics. But today it sits at somewhere around the order of 15% of the size of Ethereum. And KEEL will represent for the first time an institutional scale balance sheet on Solana, starting to roll out over the next few months. It means driving those new issuances or RWAs and being that catalyzing force we spoke about. Today, Solana really, really lags on the RWA front. And we expect KEEL alone can be a driving force to take it an order of magnitude up from here. In its role as blocking some of these hurdles and having to remove these other points of friction beyond first issuance as well, and in terms of helping these assets integrate into DeFi and go lending and swap liquidity as well. And then on the point of the DeFi dollar or debt token, it means bringing much, much better rate stability to markets as well. Solana lending markets today have a real reliance on a small number of whale lenders who are lending entirely in fiat-backed stables. And so the addition of STAR and the ability to dynamically rebalance, expand and contract supply of USDS and other stables in response to demands, and really brings rate stability rather than rates that are sort of thrown around by utilization, which is sort of the nature of what we see on Solana today. It's really, really going to help Solana as an ecosystem grow demand for borrowing from more serious borrowers and more serious capital allocators to come after us. So for those who maybe are less familiar, we've also included just a quick recap on the sort of core business model for a STAR, and how STARs can interact with Sky and the agent framework. And of course, everything here is just very illustrative. Any numbers are sort of just to sort of demonstrate a point. So certainly don't read too much into anything here. But effectively, we start out with KEEL having a balance sheet with some number of assets that it as a organization owns outright. In this example, that could be $20 million of stablecoins. At this point, obviously, there's no debt and there's no allocation into any other sort of yield-bearing assets or lending positions. With its connectedness into Sky, it's then enabled to borrow USDS directly from Sky, collateralizing its own balance sheet. It can swap those USDS borrows into other stablecoins, either through the PSM or through other DEXs offering stable swaps. Because of KEEL's original risk capital, it means that it remains fully over collateralized at all times with respect to that liability in USDS to Sky. Of course, that's not particularly interesting, but we've just held a bunch of different stablecoins. It then allows us to take some of those stablecoins and allocate those into yield-bearing opportunities like lending markets within Solana, where we continue to hold a certain amount of capital that is appropriate for the type of risk that we're exposed to in those lending markets, in addition to the over-collateralization that those borrowers place within those lending markets as well. Then, of course, similarly, we can also allocate into opportunities and yield-bearing assets, like whether it's off-chain sources of yield from traditional finance or whether they be tokenized strategies. These are all options that KEEL can explore and consider, subject to continuing to meet its risk capital requirements that are set out in the Atlas. So yeah, I guess when everything is humming, this is a dynamic allocator at scale, and we'll hopefully see kind of continuous rebalancing across these different opportunities within the Solana ecosystem, helping to grow Solana, but also helping to grow the scale of opportunity and diversity of opportunity for the rates that Sky generates. And yeah, I guess the big news that we had to share most recently was that first allocations will be taking place later this year. There's been a lot of work to get here in the infrastructure front and in establishing all those relationships and integrations. And so myself in particular and all of the team are very excited to see all of this come to life after a lot of hard work, and a lot of gratitude to other teams across the Sky ecosystem who've worked with us to get here on some of the integrations and infrastructure deployments. And we'll also be working very closely with the Solana Foundation to launch a major, very public RWA program to sort of drive that first tranche of issuances of RWAs in Solana very soon as well. So definitely stay tuned. And yeah, this is just a quick slide to sort of share with you guys how well received the news was. Really a lot of excitement within the Solana ecosystem, right across wallet providers, DeFi protocols, issuers, tokenization platforms, right the way through, and really a lot of resounding support and excitement for what's to come, and a lot of partners in the ecosystem very excited to work with KEEL and to work with Sky as well. So that's been very encouraging to see. And then just a short note to mention that as part of the STAR model, KEEL will of course have to transition to more greater and greater decentralized governance, and will of course be launching a token at some point, which the Sky ecosystem, of course, will benefit from, and hopefully have a big role in participating and helping to shape the direction of KEEL as well. So yeah, that was a quick overview. Hope that was helpful, but happy to take any questions or any discussion.
Thanks so much, Kian, and welcome to the fold. I'm just seeing if any questions are in the chat. I don't think so. Maybe we can invite Rune to stage. I'm sure maybe to just enforce some words on KEEL and also for stUSDS. Oh, we do have a question from Chris, Kian. I'm not sure if you can see the chat, or should I read it out?
Yes. Was the Solana expansion planned back when the USDS ticker was picked, or is that a coincidence? I certainly was not involved at that stage. I don't know if that has any coincidence, but I suspect not.
No, it wasn't. I can answer that. But there has been, there was a huge focus on investment in expansion Solana right from the beginning of the launch of Sky. I think USDS expanded to Solana like a month after USDS launched it on Ethereum, and there was like massive incentives, and even now there is still this subsidy of liquidity on Solana, which means that it's possible to convert USDS to USDC directly on Solana without having to bridge to Ethereum. Maybe, Kian, you can talk a little about the difference between like Solana native tokenization projects and then like the the sort of the Ethereum native tokenization projects.
You mean specifically sort of in the tokenized real world asset space, right?
Yeah, I mean, we were discussing this the other day, and I think it would be interesting to talk about like the pros and cons of that stuff.
Yeah, and it sort of what I touched on in the presentation as well. There are a number of assets, I guess, that are described broadly as RWAs in Solana, but really a lot of them are wrapped permissionless Ethereum assets bridged through some interoperability provider like Wormhole, for example, which is a terrific start. But the subtle nuance there, of course, is that they don't carry the same level of legal recourse off chain if that was ever required, and so they do represent additional levels of risk, additional levels of smart contract risk, and additional levels of risk associated with that ability to enforce claim off chain, and so not quite exactly apples with apples. And so a lot of the reason for that to date has just been that Solana is a very different beast in terms of the virtual machine. It requires a completely different set of smart contract paradigms. It's a completely different programming language. And without there being a real driver for asset issuers to demand from tokenization platforms to build that first-class citizen issuance on Solana, it really just hasn't happened to date. And so that's sort of the role, I guess, KEEL is playing in trying to identify high quality assets as part of its allocation strategy on Solana. It's really being there to demand those first class citizen issuances on Solana that are equivalent, in both their technical risk as well as their legal risks as the equivalents on Ethereum. Chris, given the strong demand for DAI, will you also support USDC to DAI on Solana? So I think in the question of, I don't think there are currently any plans, but maybe I can be corrected on whether Sky has plans to bring DAI, but to my knowledge, that's not intended at the moment, just USDS, but there are plans in place to bring stUSDS, and I guess a lot of the liquidity and infrastructure associated with stUSDS to USDS, as well as USDS to USDC and other leading fiat-backed stables as well. Sam, I guess is your question about demand for USDS and stablecoins, or is that a question about token demand for the Sky token? On the question about more holders of USDS on Solana, I don't have those statistics, but I wouldn't be surprised. There are a lot of lower wallet value balances on Solana. Obviously, Solana has a lot of retail adoption, and there's a lot of the nature of it being kind of a high speed, low cost chain certainly encourages a lot of lower value wallet holders. So I wouldn't be surprised to hear that there are a large number in headcount of USDS holders. What are the current rates available in the main DeFi protocols on Solana, Jupiter, Camino, Drift, etc.? And how much depth do you think those protocols have to deploy into the rate that beats the base rate? So at the moment, Solana's DeFi lending marketplaces do generally trade at a bit of a premium in terms of the borrow rates versus Ethereum or the EVM chains. A lot of that is, I guess, to some extent, a risk premium, because there is not the kind of same stability in rates on Solana as there is in Ethereum, and part of that is what KEEL is intended to try and help solve. There's a dependency on a lot of concentrated suppliers of stablecoin lending liquidity. So today, I think they generally trade somewhere maybe of the order of 70 bips, typically higher than you might see on other kind of chains of similar size. That in turn should drive demand for more collateralized lending and the capacity for KEEL to lend into Solana today. So there's a reasonable scale of opportunity today, but there's a lot of work to be done, and a big part of KEEL's philosophy, I guess, is helping to grow that and also hopefully benefit from that in the medium to long term.
Okay, so maybe I should just answer this question about other styles on Solana, which is actually something we also discussed the other day. But then you can answer my question about collateral conversation afterwards. But so there's this question about how do other stars expand to Solana, and this ties into the broader concept of the Pioneer Star, which is the system that is basically designed to allow, it's designed to incentivize individual stars to kind of go and do the ice breaking of setting up everything Sky related on a new blockchain. And the basic idea is that the expansion of KEEL onto Solana should then like sort of open up so that everybody can easily, like, if the market's proven, and then there's a bunch of open source tested audited code that can be reused by all the other stars. But then the Pioneer Star still benefits from this because it has this passive benefit from all adoption of USDS on the what we call the Pioneer chain. So in this case, Solana, and for other Pioneer Stars with different blockchains. And one thing that something I am considering now how we can improve the system is to basically deal with the edge case where you have other stars basically reusing infrastructure on the Pioneer chain, but in a way where they don't actually help contribute to the USDS demand at all, or like the growth of USDS and the growth of the Pioneer Star can be in a situation where basically it sort of breaks through to the new ecosystem, but then doesn't actually get any upside from other stars participating in that ecosystem. So there needs to be some kind of solution to that. But so basically the end result should be that KEEL makes it extremely easy for any other star to engage with Solana, but doing so for the first 3 years. So that's kind of the pioneer phase. For the first 3 years, once this connection has been set up, all of this activity coming from other stars onto Solana also directly benefits KEEL. So KEEL actually, and so Kian as a founder and like the team behind KEEL, they will all be working to not just expand KEEL on Solana, but actually bring all the other stars there too, because they should be seeing upside from as much activity as possible in Solana. And if we can end up setting a, like, you can get a really good system for this in the end, then what that's going to mean is Pioneer stars will be incredibly in demand for all blockchains because they will sort of open up to very broad interaction with the entire Sky ecosystem.
So in your question, what's the typical collateral composition when deploying USDC, USDS into the main DeFi protocols? So I think this is going to be a bit of a gradual shift over time. Right now, certainly the majority of demand on Solana is for USDC. I think it's something in the order of 70% of stablecoin supply is USDC. And almost all of the lending is conducted in USDC. So in the early days, I think a lot of our supply will be that, while we try and grow USDS demand as well. But I think part of that is you need to build the infrastructure around it. You need to establish, confidence that USDS, USDC swap liquidity is there to stay. There's a lot of work for KEEL as a pioneer star to try and build the right pools of liquidity against USDS for different swap routes, and to work to kind of educate and make folks within the borrower space aware of the benefits of USDS, right? The rate stability, the ability for kind of more elastic scaling when it's necessary. I think over time that will be a gradual walk up and increase as we can increase demand for it. I think very early on the composition will be very skewed towards USDC would be my expectation.
Sorry, can I just clarify? I don't mean what the exposure will be denominated in. Rather, what will be the actual asset collateralizing? What will be our actual underlying exposure? Which, because at the top of my head, the only thing I can think of is SOL, right? SOL and staked SOL. So I'm wondering what else, because
Got it.
I'm
Yeah.
there's
a lot of SOL LSTs. There are a handful of new yield-bearing strategies. Maple Syrup USDC, for example, has grown a lot on Solana over the last couple of months. There are some perps LP tokens that folks borrow a lot of stables against. All of this stuff is part of what we'll need to figure out in terms of the overall allocation strategy, obviously where KEEL's comforts are in terms of which assets it's lending against. But certainly in sort of the larger main markets, a lot of the demand will come for borrowing against SOL, LSTs, some GC assets as well. Question from Chris on estimates of roadmap for future products tokenization. I'm hopefully going to be going live with first dollars this year, and hoping to kick off some programs on the real world asset side this year as well, likely with placements taking place some stage in the first half of next year. And we, I guess, will be gradually ramping that up with capacity, to lend, and with for the infrastructure to be sort of battle tested and hardened and develop as Lindy over time as well. But yeah, I think you can expect a lot of news and a lot of updates starting to flow from KEEL into the Solana ecosystem over the next couple of months.
All right, everybody. Any more questions for Kian? Like, I just want to highlight that it's just, I mean, it's really cool to see how now we basically have yet another high agency founder that is ultimately, in some sense, working on Sky, right? It's just like it's a sort of, it's a modified version of Sky in a sense, right? It's a different, it's basically a separate version of the system, subdivided and specialized, and then highly autonomous and independent, which enables it to even get this like Solana native, identity, which was really like a fundamental part of the strategy for the stars, right? That you can have this, like, you can really like not just adapt to the technology and adapt to the opportunities of some particular small area of specialization, but even adapt to the culture and the community and the branding and all of these things that I think you need to really tap into all the synergies that exist in the entire crypto ecosystem. And it's really cool because Kian is like a complete Solana native. It's also really frustrating sometimes because it's like difficult for Ethereum natives and Solana natives to work together because they're like completely different. And I would guess there is very few projects and maybe no projects out there that actually has this type of capability that Sky now has. That Sky is like simultaneously Ethereum native and Solana native right now. Although, of course, it's just the absolute very beginning of KEEL, right? So it's, even though Kian and the team, they've been working for like a really, really long time, an unbelievably long time, considering how we knew it was going to be difficult, but we didn't realize how insanely difficult it would be to kind of set up the initial connection between like the full, the sort of the full scale Skylink system that permanently will connect Sky across Ethereum and Solana. But now it's gonna, like, instead of Kian working behind the scenes to deal with some super complicated tech stuff, him and his team will like basically do growth and business development and expansion and synergy and partnerships and all of these things in the extremely large and successful Solana ecosystem, and doing so essentially as Solana natives, but wielding the scale and sort of tapping into natively into the Sky ecosystem. So that is just super exciting, and we're going to see probably like results from this in 3 months, 6 months, and just continuously from then on, right? KEEL is basically, once it's created, it's going to last forever, right? It will just continue to execute and seek profits and generate value, and then Sky will get to take a little cut of all that value that's being generated, but of course most of it will go to the actual team and actual people doing that, which is in turn what's going to fuel the scale growth and success of projects like KEEL. And I mean, that's just the third star, and there's like a whole bunch more of them coming, and every single time it's like you're setting kind of this, I don't know, it's like you're shooting a spaceship into space, and it simply takes off and will very rapidly become fully autonomous and just grow and generate value all by itself. So I think that's it has been an incredibly difficult way of working to try to get this off the ground, and it's still, in many ways, it's not really off the ground. It's still like on the ground. We're about to take off. But it's like when you start to see these like glimpses of how the future will be, of like how you set up systems, and then they simply go off their own and with extreme independence and capability to adapt, execute, and grow on their own, that's gonna really pay off. And KEEL is just very like a very unique showcase of this, because it's giving Sky a capability that's just completely sort of foreign to what Maker was able to do in the past.
Thank you for the kind words, Rune, and yeah, thank you, Rajiv, for having us on the call. It's very exciting to be out in the public about it, and I'm looking forward to being back on soon to share some good news. But yeah, thanks everyone.
Okay, and then I see there's another question here that I can also just answer. So, will KEEL operate independently, fully integrate with the Sky main protocol, and what are the interoperability plans? Yeah, this is a funny question. So actually, KEEL, the core of KEEL is actually on Ethereum mainnet, right? So it's a star exactly like Spark and Grow, and it functions exactly like every other star in Sky. It's just from Ethereum mainnet, rather than KEEL then doing a bunch of stuff on Ethereum, all it does is go through the bridge and do everything, like kind of carry out all of its actions and operations on Solana. But as every star, yeah, it does operate independently. So the answer is kind of like both or something to this question, right? It's fully integrated with Sky, but it's fully independent to the extent that's possible while remaining fully integrated with Sky. This kind of like weird, what sounds almost contradictory, like fully independent and fully integrated, that is like the heart of what makes Sky special, basically, right? We're trying to like combine two things that generally are seen as complete opposites, which is which is really synergy and economies of scale with autonomy and flexibility and independence. So usually, if you want to synergize and you want to scale up, you're going to have to reduce autonomy and you're going to have to reduce independence. And Sky doesn't fully get, it doesn't go all the way to the absolute extreme of the what you can squeeze out of scale and synergy. And it does have some level of like standardizations of some limits on independence and autonomy and flexibility, but it's very close to being at sort of the extreme end of both sides, which is a very desirable sweet spot, I believe, right? Where you can be highly scalable and synergetic while also retaining a huge amount of autonomy, independence, and flexibility. And then actually have these two things happen simultaneously, which is quite magical and really only possible because of blockchain. And at a very large scale, it's also only something you can do by leveraging AI tools to basically allow all of this to be done safely. All right. Yeah, well, I don't know if Kian completely left or he's still there, but thanks again, Kian. Thanks on behalf of the whole ecosystem for being the first Solana native founder, and to the whole KEEL team for being the first Solana native team that is now also part of Sky and has set up this historical bridge, really, where you have a project that is now native to two blockchains simultaneously. Okay, now I will just do 15 minutes of Q&A, and maybe we'll be getting into stUSDS a little bit. Or beyond. I mean, and basically I'll just answer any questions, really. Okay, so I think this is a question. I'll read it out and we'll see. Apologies if we're not talking about Sky today, but I was hoping. Okay, so we are. Now is the part we're talking about Sky. Okay, so buffer capital getting close to zero and the plans for staking yields, buybacks, given that. How sustainable are the current rewards and buybacks? So right now, the aggregate capital buffer looks extremely low because we have shifted to the monthly settlement cycle, and that means that the majority of Sky's income happens only it gets settled only once per month. Right now, we're like 2 weeks in the month, so it'll continue to get worse and worse until the end of the month, at which point a very large payment will come from both Spark Grove's allocation system. And so overall, the profit number that you see on info.sky.money is more or less correct. Like a bunch of, obviously there's like a bunch of uncertainty around how exactly do you predict profits, because that number is not showing historical profits. It's showing like estimated current profits that you would more or less expect to get 1 month's worth of in the following month, right? In the following settlement cycle. But my overall estimate is that the aggregate capital buffer will go up with something like 3 to 5 million per month. However, actually, there are some plans to also slightly reduce the amount of staking and buybacks, just to make sure that it really is. I mean, I basically think it should be at 5 million, and that's like a solid position to be in. And then as long as it's in that range, then the capital buffers will begin to really grow once you have. I mean, the big cap that's coming is all of the Genesis agents actually launching the tokens, which is going to be the big driver of additional income for Sky. But yeah, basically, I mean, there obviously, if we get to a point where profits, like where there's something that causes income to significantly drop, one thing that could cause that is let's say a major reduction in the demand for DAI, right? Because DAI is really actually the cash cow for the system, right? That's driving a huge amount of profits. If that happened, then the consequence would have to be a reduction in staking rewards and buybacks. But on the contrary, I mean, the opposite effect is going to be the launch of the Genesis agent tokens, which will help significantly increase profits, maybe to an extent greater than the effect of DAI. Like basically, I believe that Spark right now by itself has an effect equivalent to 1/3 of the entire DAI supply, around that, maybe a quarter. A couple of more Sparks, and then we already have cash earnings exceeding what we get from DAI. Okay. Next question. Is the plan for stUSDS to become a profitable venture, or will Sky keep subsidizing it? I was surprised that deposit and borrow rates are going down together. When are we thinking to launch actives? Okay, two separate questions. So the first question is, the answer is yes. The exact numbers are not finalized, but I think it'll be something in the order of, first of all, there will be the regular Sky spread, which means that Sky will earn 10 basis points on all stUSDS as sort of the baseline that it earns on all, like it earns on stUSDS. And then in addition to that, there will also be a spread of 5 to 10% of the excess yield on stUSDS. So basically, if the stUSDS rate is 5%, if the Sky savings rate is 5%, and the stUSDS rate is 10%, then or rather, sorry, the borrow rate, yeah, okay, it's a little complicated, but let's say for simplicity's sake, the borrow rate is 10%, the staking borrow rate is 10%, then the stUSDS yield would be 9.5%, and Sky would then take an additional 50 basis points. So this would be like if we end up taking 10% of the excess yield on stUSDS. And ultimately, this is actually really important. It's really, really important that I guess like that ultimately the ability for Sky holders to leverage their Sky, that ends up being something that drives income to Sky. Just because that's the way you can like basically that's how you can justify it from from the perspective of like absolute stability to the system. Obviously, having the ability to borrow against Sky is also really essential for improving governance security. But adding more leverage to the governance token also just could increase instability if it's done the wrong way. And of course, there's like really strong protection in place, like most importantly, the sticky oracle. But then by also having it just be an actual profitable product is going to just be overall really beneficial. And just means that every time somebody borrows with their stake Sky in the long run, they are contributing just a little bit extra to the capital buffers of the system, as well as to all the stakers and all the Sky holders that don't take leverage. Yeah, when I'm thinking of launching active staker incentives, that's gonna be a long way out, basically. So that requires a lot of technology that's currently not in place. So for the foreseeable future, that will simply just be the staking rate plays that role. Will KEEL introduce any new features or improvements that could later be integrated back into the Sky main protocol? So they're very close to having done this, right? Which are the features that allow any Sky star to basically deploy and operate on Solana. And so that is going to be open source and it's going to be available for all Sky stars, but in a framework where it's guaranteed that the activity of other stars will also benefit KEEL for the first 3 years. Okay, any idea what the holdup is with growth, user deposits, and token launch? I don't know. I don't have any insight on that, on the specifics of that. But maybe they will be able to provide an update at some point. Yeah, how close was I to getting liquidated at the big crash? Luckily, not at all. But also right now, liquidations on like staking borrow are manual. So what that means is a flash crash will not result in liquidations. On top of that, there is this extremely important system called the sticky oracle, which means that basically right now for the staking borrow system, the Sky price has for the purposes of how much leverage you can get, the Sky price has a ceiling of 4 cents. So what that means is, even though the price right now is around 6 cents, and maybe later it could pump, let's say it pumped to 10 cents or something, right? The amount of leverage you could get per Sky token would still be the same as if the price was only 4 cents. So this also means that you can have a situation where you have this like reflexive loop where the Sky price goes up and then more people they stake and they want to get staking rewards, and then they lever up to get even more staking rewards, and then they buy more Sky, and then you get this like levered up bubble where people take, because the price is so high at the top of the bubble, they can actually take huge amounts of leverage, and then you have this massive liquidation cascade where people get liquidated with very high liquidation prices. And then by ensuring there is this ceiling on the Oracle price, it's possible to sort of slowly increase what the ceiling is, but basically doing that only as it's really clear that it's supported by fundamental liquidity and sort of long-term adoption and value flows into the Sky token. All right, should stUSDS be successful? I would consider using a similar system for more risky assets such as WBTC. No, actually, it's not needed because all of this is supported through the risk framework. So Sky supports WBTC and everything else really under the risk framework. The one thing that it doesn't, the Sky can't support is self-referential or like endogenous collateral, right? So that's exactly the problem with using Sky as collateral, is that the value of you can't collateralize USDS with Sky because the value of Sky depends on the success of USDS. That's kind of like the basic thing that makes it, that sort of just makes it impossible. So that's why a separate asset, stUSDS, is needed for it. Is there a way for contributors to earn recognition incentives through supporting KEEL's early growth? We'll have to have Kian answer that, but I suspect that right now they don't have anything to announce on this front, but maybe they would announce if they decided to do some kind of system to support contributors or ecosystem participants or something, then I would expect them to announce that in in the coming months or so, as they kind of do their big initial launches of their features and their and plans. All right, so there are 239 stakers for a rather large amount of TVL, 185 million. Does this mean we have not communicated to the masses at all? Was that the strategy? Yeah, it was kind of the strategy. I mean, so stUSDS is a risk capital token, right? So it's something you deliberately want. I mean, you when you communicate about stUSDS, you have to make it clear to people that this is not a token that is designed to protect them, right? It's kind of the opposite. It's a token where they are kind of deliberately taking this like isolated higher risk of Sky liquidations going wrong. That doesn't mean, I mean, especially considering the sticky oracle, the risk should not be that high necessarily. But it's the design of the token is so that as soon as there's any kind of loss in the like in a Sky liquidation, then immediately that loss is passed to the stUSDS holders as a haircut. So there's this like very there's just this like very clear risk built into how the token works, and that makes it a lot more difficult to just kind of like promote to the masses, so to speak, right? Because if you try to really simply promote it very broadly, then quickly the nuance of the risk will get lost, and what you will end up with is just like spamming out. Here's a token with a high yield, great opportunity, right? And then you can just end up in some unfortunate situations, right, where people end up taking losses thinking it's a stable coin that is as safe as USDS or stUSDS. So it's better to kind of like let it get adopted in phases and have it and focus on the more mercenary capital at first, right? That's able to kind of seek out and tap into these opportunities on their own. So I think it's and it's also just a matter, like right now it's just a matter of bootstrapping the market, right? Like what's happening next is we have to actually start having some borrowers come in. Right now there's not a lot of borrowing activity yet. There's been around 2.5 million USDS borrowed since borrow was enabled through the inflow of stUSDS. And meanwhile, there's like a huge amount, like really exceeding my expectations of how much stUSDS came in. And so what that means is now the rate is going to start going down until the point where the stUSDS, they start pulling out again because they think the yield is too low compared to the risk. And also where the borrowers start to step in and you start to see more staking borrow because the APY gets low enough. But we're already now in like an interesting point where the borrow cost is lower than the staking yield. So that means if you're looping your staked Sky now, you are actually earning it's profitable, right? Your loan will pay itself back basically. But of course, it's not free money, because that still requires you to take on priced risk of the Sky token. So it could be that the rate still has to go lower before we will start to see a lot of borrowing. But at some point, we're going to find that balance. And then the mechanism that controls the rates can become a lot more automated and a lot more predictable once that equilibrium point has been found. And basically the market is more flexible and liquid. And then at that point, to the point that Mike just wrote in the chat, and at that point it starts to become more manageable to actually try to drive more adoption and be more clear about what exactly is this asset and who might benefit from using it. Yeah, no looping is being able to loop is difficult when there's very little on-chain liquidity. A trick to anybody who wants to try to acquire Sky is you have to use cow swap TWAPs. So you have to buy like over a period of time, and that works incredibly well. Then the question is if you can somehow use that for looping or something. Who knows? Maybe there's some cool product that could be built with it. All right. Well, that was the last of the questions, and that hit the time perfectly. So, okay, maybe there's one last question from Herv, but I'll read one more question, answer one more question, and then we're gonna call it a day. No pressure. Okay, any DeFi project building on top of stUSDS? I think it has now been integrated by CowSwap. So I don't know if that counts as building on top of it, but we could see like a sort of a broad adoption of stUSDS potentially if it turns out that being over collateralized with sound risk parameters by a project that has a lot of profits and it's just like a very stable, maybe that ends up being like a desirable characteristic of a higher risk, higher reward token, right? That pays a little bit higher yield than what you can expect from a normal stablecoin. All right. Thanks for your time, everybody. I think we'll be back here next week. See you around, guys.